Hello, today is October 12th, 2019. We'll go over our calls. Look for the pattern with the early high. This was it. Monday's pattern has the early low. So the commonest thing would be if we gapped and promptly move outside of Thursday's range. That we did. Had strong resistance at Thursday's high. I said either we gap over that resistance or the resistance holds. I was hoping it would hold, but it was clear before the open we're going to gap over. That means we have to redo our wave count and our targets. Only call we got from MEJT on Friday was that this rally wasn't the real thing, that we'd undercut this line, and we did. Well, here's what we said. We said that most often lead to a gap and prompt move outside the day's range. We got that. The wave count suggested that we'd break down. We broke up, so we have to fiddle with the wave count and come up with a different price target. Well, we had wave B here. I was hoping that would hold. It didn't. So this is a possible high. It doesn't mean we have to stop here. But if we do stop here, we have to see what kind of a target's available. Well, this was the big drop we had at the end of 2018, and everything since then has been a Fibonacci relative of this drop. This was 100%. You can see how this leg was 38.2, how this leg was right at 50. So the fact that this leg is at 23.6 makes it a likely target. So you want to come up with a target for a drop from here. What you'd like is for blue A and blue C to have some kind of relationship. So we take the height of blue A, move it over here. Now you'd also like magenta A and magenta C to have some kind of a fib relationship. So you take this and you look for a point where the lines meet, and we get around 29.09. That's too short for me. Well, the next commonest thing is if there's, instead of a one-to-one relationship, but if it's 0.618 to 1. So we take this at 618, and if blue C is like that, we get a target around 2653, 2652, something like that. And if that's where we end, then wave C, magenta C, is equal to exactly twice magenta A. Now that's not the only ratio between A and C that you can have, but if we stop here, at least you have wave balance in the 2650s, quite a drop. It just tells you what the potential is if we fall from here. We're not going to risk any money on that yet, though. So if this is the high, it's potential for big trouble. We'll go over whether or not it's the high in just a minute. Well, the weekends when we normally talk about the long-term pattern, let's go over how we came up with my target, which is in the 3410s. Here's the count. It's a beautiful thing when it works. You can take a line between the top of 1 and the top of 3, take a parallel of 2, and there's your point 4, just where it belongs. I know other people have point 3 someplace else, but I don't buy it. You also want to have a fib ratio between 3 and 1 if it's at all possible. So if that's 3 and that's 1, you can see a nice 50% of 1. 50% of 3 is wave 1. It's actually even closer than that. So now you want to have wave 5 to have some sort of relationship to wave 1 or waves 1 through 3. If the high's in, as some people are saying, there is a relationship between that high and wave 1, which is 78.6% of this move. But that's not the only way to calculate things. One way a friend of mine showed me, you set the first wave here at about 23.6%, move the target to the end, to the start of wave 2. This is a 423.6% move, comes out to about 34.18. And what's interesting is that if that is the high of wave 5, wave 5 would equal exactly twice wave 1, and that's how I got the target. So we'll have to see if that works. Other numbers may work too, but that's a real pretty one. All right, how about Monday? Monday's pattern has the early low. We could gap up first. We have conflicting signals. It's negative. We gapped up and couldn't hold on to the highs, and the breadth's lousy. And the equity only put call ratios at the lower Bollinger Band, but shows option players are extremely optimistic. That deserves to be punished. It's bullish. There was a wall of selling into the close. Often that's followed by gapping up. We had a late steep drop. It undercut the daily lows but closed over them. And absent a steep drop early Monday, pattern is typically positive with a high in the last hour or at Tuesday's open. So here's our plan. China talks could influence today's trade as they did Friday, making analysis hard to do. The late Friday sell-off typically follows through into Monday's open. If you gap up instead, it's positive. You then look for a low in the first hour of trading with a rally into the final hour. If we're down for the entire overnight session, that's too pessimistic. The selling should be over an hour or so. Look for a day-long rally. But if we gap down and promptly recover, should be another low after about 2 hours of trading. Late high should come at the same time, but it might not exceed the price of the early low. Dropping steeply in the first hour or two should be followed by more selling in the days soon thereafter, and the odds then would be the high of this leg is in. In any event, I think the upside is going to be limited. There's just too much optimism among the option players. I think there's also too much pessimism among the investors for this to be a major high. When the next wave of selling is done, I think there should be a strong rally lasting into 2020. Early low Monday, and that's today's call.